Coal prices are in trouble. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. I thought we'd have a look at this article that was shared to me by a viewer about coal prices and pressure on the coal producers. Now, for those of you that are not aware, Australia has a reasonable coal industry. We'll jump over here to one of my favourite websites, the Observatory of Economic Complexity, and you can see here that coal is a $47 billion export industry. And what we'll do is, we will just jump here on coal. It's the 16th most traded product in the world, the coal briquettes, and, well, its complexity is pretty low. The top exporter of these in the world are Australia, followed by Indonesia, Russia, and the United States. So we're the biggest exporter in the world. And yet all the greenies and everyone don't think Australia needs coal. Funny, isn't it? Concerning. Now, what we'll do is we'll have a look just at, I'll just bring up Google Earth here, and this is showing you all of the active mines here in Australia. This is from the operating mines from the Australian Mine Atlas. It's from 2014, but it's the latest data I could get so easily to visually show you all the mines. Now let's just turn on, I'll turn off borders because we know where everything is here in Australia. Let's turn on coal. We'll zoom out again. We'll zoom out again. Turn it, make sure we can't forget Tassie. Can't forget Tassie. We can see all that. Turn it off. We turn it on. Okay. Looky here in Queensland. Look at New South Wales, even a few in Victoria. Can you see why my business, the first big mining jobs we got were coal? In the coal industry? I mean, here you go. You can have a look at, Blackwater, Cook. I mean, you can see here, guys. Here's the mines. There you go. There's Blackwater. We did some proposals for something. We did so many proposals because back in the day, in 2011, Rawlinston, yep, Emerald Creek. These are all the ones here in Queensland. I'm just remembering project names, guys. We did lots of proposals for modular builders that were tendering on different options, on expansions, on upgrades, on mine industry areas, on some of these mines. The two biggest jobs we won were each about $15 to $20 million worth of buildings on these mines. And a lot of that work happened when, I'll bring this up, when the price of coal was a bit higher. So we'll jump out here. This is from Trading Economics, guys. You can see here, it's about here. We'll go to all-time data. It's back here, 2011. When the coal price was at 120, it got over to 140 at one stage. Australian. Oh, sorry, USD. Now, we're down to $53. This is going to affect revenue. This is going to affect all the people who are working in these businesses. It's going to affect the mining businesses. It's going to affect state revenue. And it's going to affect our entire economy. Because Australia, as I said, is one of the biggest, is the biggest coal exporter in the world. Remember here, New South Wales. Remember how Labor was turning their back on all the coal miners, saying it was an industry we don't need. Do they not realize the reality of what they're saying? Have you watched The Planet for the Humans? This is the documentary that was done where a lot of the lefties are going crazy because it highlights a few very interesting things. It's got quite an anti-natalist overpopulation bent, but I mean, they still need to get over that. But it shows you just how ludicrous all the solar power is, particularly because it's so much coal is used in the production of the panels. Just all the land clearing that occurs for, wind farms. I mean, let's bring up here. I'll bring up another data. Just the energy market here from Australia, looking at our current energy producers. I mean, here we've got, why are all these wind farms not utilized? Oh, wow, I've never seen this before. Let me just bring up some wind data for Victoria right now. We can see. Okay, so it's too slow. 0. Well, there you go. So here's an interesting thing. See how it's still drawing power when it's being used, -1. That's the thing. These can be a net negative. So in this documentary, Planet of the Humans, they talk about just the solar panels, how they have all of the embodied energy from the coal. It's like the lefties and the greenies are learning about the concept of embodied energy. And that's when you take account of the energy required to manufacture something and also the embodied carbon output. There's also carbon CO2 produced. If you're trying to implement these green technologies to offset carbon output from other technology and embodied energy from other technology, sometimes it just doesn't stack up, particularly when you have all of these running at 0. 0, 0, 0. That's crazy. Now, what we've got here, we'll have a look. Okay, they haven't kicked in. Notice how these ones are in red. They're fossil fuel ones. You've got these little ones in the city. There'll be gas turbine plants that are used to provide additional capacity to the base load if power production is down. I'm surprised. I've never seen wind that low. That's the problem. All of this stuff is intermittent. So if you haven't watched that documentary, I recommend you do, because it gives a dose of reality about wind farming, a dose of reality about solar farming. It even highlights the fact that people have a sense of religious fanaticism about the green environmental movement. But the biggest thing is a criticism of the biomass industry, where they're just burning, instead of burning coal, which Australia's a big exporter, they're burning wood. They're shipping wood chips all around. And it's nowhere near as efficient as coal. And we've got some of the cleanest coal in the world too, guys. So when I was explaining this to Mina, I was saying it's good here, and Mina's my 7-year-old daughter, it's good if Australia exports coal around the world, because there are people in India, some of them are still burning animal dung to keep warm, to generate energy. And that's very unhealthy, and it leads to sick little girls. So, can you see why we're avoiding the hippie daycare system and schooling system now? She's getting lots of arguments. So, back to this. Let's have a look at this article, because if this price falls, it's going to have some economic impacts for Australia. While oil was in the hot seat in the March-April, coal is now in focus, reeling from a slump in demand as prices fall to multi-year lows. Benchmark hard coking coal prices have dropped 20% to US $115 per tonne in the June quarter to date, the lowest level since March 2016. What is a reasonable short-term floor? Macquarie assesses many seaborne, thermal and coking metallurgical coal producers remain profitable, and it will require more downside to prices before a substantial number become pressured to cut output. So far, thermal supply disruptions in South Africa and Colombia have been eclipsed by a surge in China's domestic output, while the pandemic has reduced consumption in all major Asian regions. The most likely area where coal production will be cut back is Indonesia, in Macquarie's view. Nevertheless, Mongolia's exports are ramping up, and there are no major disruptions in Queensland. So this is good at the moment for us. And the thing is with the Indonesian coal, here's the thing, all the convoys of people coming to protest the coal mines here in Australia. If they don't get it from Australia, say, India, they'll source it from Indonesia. And Indonesian coal is dirtier than Australian coal. At least the stuff we were selling. So there's rising pressure for more reductions among US producers, which are the highest cost swing suppliers on the seaborne market. Macquarie assesses this alone cannot offset a short-term collapse in the price. Morgans is also becoming increasingly nervous about a future correction in thermal coal prices. The ongoing impact of pandemic-related shutdowns to industry remain the key risk that metallurgical coal makers, and Wilson's notes the forward curve is signaling lower prices for the remainder of 2020 amid further downside risk. Macquarie agrees and anticipates the higher downside risk appears to be greater for coking coal, as top-grade hard coking coal is still 20% above the 90th percentile of the seaborne cost curve. Moreover, coking coal faces a larger problem than thermal coal, as demand from the steel industry outside of China may shrink even further. So there you go. That's going to be a double whammy for us, isn't it? Australian producers. Suisse assesses Coronado Global Resources, a pure coking coal producer, is indicative of the current environment enveloping global coal miners. The company, in its latest production report, has withdrawn 2020 guidance, and US production has ceased for the time being. US production has ceased for the time being. Just think about that. The US economy. Are we going to have this V global economy recovery that everyone is talking about? I can't see it, guys. Hence, debt is elevated, rising to US $439 million as working capital movements go against the company. The business now faces a 12-month delay to the Courier expansion in Australia, and I know I butchered that. So here we can see how it's going to have an impact here in Australia. This is unfortunate. Wilson's asserts as the Courier products have superior coking coal qualities and are preferred by customers. Combined with shuttered US production and the weak dynamics of global steel production, the outlook is bearish. Still, there are further levers to be pulled, Credit Suisse notes, and US operators remain positive in terms of cash flow, given the scale of inventory continues. Plans to restart Buchanan and Logan are also providing potential for the outlook. In a normal year, Buchanan and Logan account for around 35% of sales volume for the company, Bell Potter points out. These operations are expected to be neutral to cash flow while idling, as inventory is drawn to meet sales contracts, so they've got enough stock to keep going. Moreover, as India and Europe emerge from the restrictions, this will go a long way to support the market, which only has China driving demand currently. Hence, Credit Suisse warns against crystallizing losses at current levels, as the assets have a long life and leverage to prices once the market turns. Bell Potter also points out term contracts to US customers should provide some price protection from Coronado Global, but in the absence of a price recovery, there is a downside risk to 2020 earnings. Macquarie recently downgraded New Hope Corp to underperform and reiterated an underperform rating on Whitehaven Coal. The broker has become more negative on coal miners because of the material downside risk to earnings as at spot prices. The broker calculates that earnings for the pair swing to a loss under its spot price scenario for financial year 21. Whitehaven has asserted it will not seek financial decisions on any of its growth projects at present, which UBS assumes is reflecting the slow growth of government approvals rather than any changes of heart by management. Brokers suspect a large push is required in the fourth quarter for the company to achieve the company's production guidance. Whitehaven has retained guidance but pointed towards the lower end of the range. Credit Suisse is also cautious as the Northern Hemisphere exits the heating season in terms of thermal coal. As with many indicators currently, the downside case is easier to make. The broker assesses there is value in Whitehaven Coal, although multiples are elevated. Morgan Swiss agrees there is material value, but awaits operating improvements, while Citi considers the stock cheap against mining peers, but on financial year 22 estimates, not on 21. So there you go. So, we'll have to see. Do you think increased demand from other parts of the world coming out of restrictions will offset these price declines? Or are we going to start seeing more of an impact on the Australian economy? What happens if we get a second wave of the pandemic? Or what happens if we really hit a deeper global recession? As always, please let me know your thoughts and opinions in the comments below. Thank you all for watching. Like, share, and subscribe to the channel. If you're a fan and you want to support us, there are a few ways you can. You can join the channel on YouTube or on Patreon. You can support us via our affiliate links at Amazon or eBay. You can also support us by buying merch from HeiseSays, using Gold Pass from the Perth Mint, or Amazon. Take care, guys. Have a great day, and I will see you in the next video.